Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Jonathan Ferro, along with Lisa Abramowitz and Anne-Marie Hordern. Join us each day for insight from the best in markets, economics and geopolitics. From our global headquarters in New York City, we are live on Bloomberg Television weekday mornings from 6 to 9 a.m. Eastern. Subscribe to the podcast on Apple, Spotify or anywhere else you listen. And as always, on the Bloomberg Terminal and the Bloomberg Business app.
All right, we're going to turn to tech now. Dan Ives of Wedbush raising his Apple price target from $300 to $325, writing, quote, "We believe Apple is heading into a multi-year AI-driven iPhone upgrade cycle that is still being underestimated by the street. Apple's on pace to reach the $4 trillion market cap threshold and be the first member of this exclusive club." I'm so excited that Dan Ives joins us now. Dan, thank you so much for spending part of your holiday-shortened week with us here at Bloomberg. So why now? Why lifting the price target now? This awkward week between Christmas and New Year's, and you said, I have a call to make.
Yeah, because the bears, they're in hibernation mode because they can't find AI in the spreadsheets. And look, we're doing the work. What we see across the Asia supply chain, I mean, we're seeing strength not just into December, what I believe is going to be ultimately a record year for Apple, 240 million iPhone units. And that's why, look, this is going to be an AI-driven supercycle that's multi-year. And that's why, look, the haters, they hate it at $2 trillion, despise it at $3 trillion, at $4 trillion, going to be yelling from the top of the mountains.
You write in your note that you estimate roughly 300 million iPhones globally have not upgraded in over 4 years. So do you think this upgrade cycle is going to be led out of necessity because people are just desperate for a new phone? Or is it that AI capability that Apple's starting to introduce?
I think about 60-70% of it is that you've gotten to the point now where that's a pent-up upgrade cycle. It's really unprecedented for Apple. But also remember that install base, that's increased 200 million even over the last few years. So the install base continues to be the golden goose of Cupertino. But the AI-driven piece, it's just starting. That's why it's a get out the popcorn moment, because in our opinion, the consumer AI revolution goes through Cupertino. And I think, look, that's why the bears will talk about valuation like they have for years in Apple. It's about some of the parts, about what AI adds to the story. We think it's $30 to $40 per share.
How hard would it be, though, for the next upgrade cycle, especially if so much is driven now by software updates? The hardware hasn't really changed.
Well, I think that's in iPhone 17. Again, that will be, what we'll be seeing later this year, into 2025. That's actually going to be a hardware-driven, a new form factor that's really going to be AI-driven. So that's why this is it's a 1-2 punch. It's 16 into 17. And that's why what makes this unique, it's about the increased services. And ultimately, you have hundreds of apps right now in development that are going to be on top of Apple Intelligence. And that's why the enterprise AI revolution is the godfather of AI, Jensen NVIDIA. The consumer AI revolution goes through Cupertino. And I think that's why we could see $4 trillion potentially, today or Monday.
One potential difficult spot, or is a difficult spot, is China. How are you thinking about China, especially with the fact that Apple needs to partner with a local company to introduce all of this?
Sure. Look, Cook, 10% politician, 90% CEO, right? And no one understands.
He might actually have to be more of a diplomat in 2025 than 10%.
And maybe 30%, 70%. But the point is, look, it's what him and Musk have had to navigate in terms of success in China. But what I love about the cycle, that probably gets announced from the Chinese partner early in 2025. It gets rolled out in April. So the China upgrade cycle in terms of AI coming to China, that's something that happens in April. And this is just the beginning of a multi-year AI cycle that plays out from Apple.
You also talk about Palantir and Salesforce in your note. I recently spoke to Mark Benioff about Agentforce and this new iteration they introduced of Agentforce. And he said it's the most exciting thing he's worked on in his entire career. Is that why you're so excited as well about this?
And for context, Benioff, Mount Rushmore of tech, right? But it speaks to our view. It's 10 p.m. in this AI party. that goes to 4 a.m. And behind the velvet ropes, Benioff wanted to see his names on the list. Now, all of a sudden, he's on the dance floor. Software is let in. Now, already on the dance floor, from a use case perspective, is the Messi of AI, Palantir. And look, that's one, as I say, the bears can't see AI in the spreadsheets. That's how, they hated Palantir as a teenager earlier this year, despised as a senior citizen living in Delray Beach at 83. But it's just the beginning now of what I view as the software age in AI. Salesforce, Palantir, and I think others like MongoDB.
What names do you think we're going to be talking about next year that were very quiet during 2024? 2024 really was about NVIDIA, Tesla. What do you think will be the names of 2024?
Yeah, I think those continue to lead in terms of my view for large cap tech. I think up 25% 2025. I think what hasn't been on the radar, it's going to be M&A, software, cybersecurity, because with Khan done at the FTC, that nightmare, whether it's Nightmare on Elm Street, Friday the 13th, is done for tech. Now I think you're going to see a lot of accelerated M&A when it comes to software, when it comes to cybersecurity. And I think that is really what's going to lead this AI cycle. And I think specifically cybersecurity is an area that I believe could ultimately be one of the biggest outperformers when it comes to tech.
Another tech analyst joined me this week and said the same thing. 2025 is all going to be about cybersecurity. I want to end on Tesla. Overnight, Elon Musk was clashing with a far-right activist who has been close to President-elect Trump, Laura Loomer. And the crux of the argument was about H-1B visas. But this individual is also saying that Musk really isn't MAGA, and yet he's so close to President-elect Trump. Do you think there's a risk there, actually, that he will lose that proximity to power, which you said was one of the best bets of the ages?
Look, it's a bet for the ages. I think that bromance actually gets stronger between Musk and Trump, because my view is that Trump needs Musk, Musk needs Trump. And whether it's AI, whether it's China, whether it's some of the policies in terms of DOGE, we're going to have these continued dust-ups. So this is going to be a soap opera, I think, for Musk and Trump that continues to play out. But that is going to actually strengthen, and it continues to be for Musk. It's the best bet he ever made on Trump.
Okay, so this is just a flare-up in an episode, not the season finale.
Exactly. View this as just one episode in a 10 to 12-parter on Netflix.
All right, Dan Ives of Wedbush, thank you so much for joining us this Friday. Thank you so much, Rob, for joining us this Friday morning alongside, of course, Dan Greenhouse. Okay, so you say this is going to be challenging, but that was already on display, I think, last week. We had basically 3 iterations of potentially how they could avoid a government shutdown, and they did in the end. But what did the whole saga tell you about how Trump is going to govern, even with these majorities he has in the House and the Senate?
Yeah, first of all, good to be with you both. Happy holidays. It showed us, I think, that when you burn institutions down, when you're running on an anti-institution campaign, then when you come into office, you can't then rely on those institutions to do your bidding, right? It's the Republican House majority is a slim majority, and it's a disunified majority. It's going to be really hard for Trump and especially for Speaker Mike Johnson, if he gets the gavel on January 3rd, to really ensure that they always have a majority vote. This isn't, the days of Nancy Pelosi where every Democrat stayed in line all the time. It's going to be hard to wrangle these folks.
Right. 38 Republicans voted against what Donald Trump wanted to see actually enacted. Well, that whole episode, though, kind of got brushed under the rug. What it said to me was that Speaker Johnson didn't have Trump's buy-in when he went to the floor with that deal that was negotiated with Democrats. Do you think he's able to keep the gavel?
I think he probably is, mostly because I'm not quite sure if there's anybody else who could win a majority vote on January 3rd for Speaker. I would think that the next most obvious pick would be Jim Jordan, who is even further right than Speaker Johnson, even closer to Trump than Speaker Johnson is. But Speaker Johnson has done a very good job, and by and large, he really has had Donald Trump's support. Now, Donald Trump is, his agenda is going to be difficult to enact. He's certainly swinging for the fences. I think for Mike Johnson as Speaker, it really is, it's about the art of the possible, right? It's not, he can't get everything done that Trump wants to get done, or at least he can't get it done as quickly as Trump would like. So what can he do, and what can he have Trump's buy-in for if he has to negotiate or cooperate a little bit?
I agree with a lot of what you're saying, and I think the average investor isn't aware. We know it's a race within a majority right now, a couple of seats. Obviously, some people are departing to leave to be in the administration, and obviously Matt Gaetz is leaving Congress in general. But I don't think people are aware when the TCJA passed, Republicans had 240 or so seats. It was a much larger majority, and so forget even the ideological differences that the Chip Roy group, if you will, exhibits. Just mathematically, it's going to be really difficult when you can have one or two or three Republicans banding together to not pass no tax on tips or whatever it is that the administration wants to do. Has Republican leadership talked about how to overcome that hurdle?
Well, I think, first of all, they're waiting on a few more seats to be filled. To your point, to have a slightly larger majority after some of these special elections are run and seats are filled. But, I really think it's going to be a question of muddling through, right? And this is kind of the issue. Generally speaking, Congress is not built for, big, fast change. And it's especially true.
By definition.
By definition, exactly. I mean, that's the whole point. And with Republicans having such a small majority, not only in the House, but also in the Senate, and certainly not having the 60-vote majority in the Senate that they would need to unilaterally pass legislation, I mean, it's going to be really challenging. And I think that that's one of the reasons why we're not seeing TCJA extension talked about in Q1, right? It's going to take a while, conversation and negotiation within the Republican caucus to get that done over, Q3, Q4.
Every congressman and every congresswoman basically becomes king or queen of the Hill, in essence. I think of one person in particular, Congressman Lawler of New York, who basically is saying, I'm not going to vote for anything unless salt's included, because he also wants to run for governor of New York, I think. Wink, wink. I think he pretty much said that in his Christmas Hanukkah message. So when you have individuals that are so tethered to specific issues, is there, in your mind, 5 issues that must be included in TCJA in order for it to meet the demands of all these different vying factions? Well,
I think when push comes to shove, the worst case for Republicans is we will see a clean TCJA extension. So if we get to Q4 and there hasn't been, an agreement reached.
So base case.
Base case, we get TCJA extension, clean, skinny. I mean, that's essentially what just happened with the budget negotiations and, last week, is that there was all of this discussion of, riders and add-ons and this kind of major Christmas tree bill with a bunch of stuff, individuals' preferences and priorities. None of that was in the final bill. There was some farm aid, et cetera, extension of the farm bill, but mostly it's like the lowest common denominator is the clean, skinny package. And given that TCJA for individuals ends end of 2025, I think that the absolute necessity in our base case is that Republicans will pass an extension. Now, the question is, what in addition do they pass? Is it no tax on tips, no tax on overtime, the SALT, extension or relief? I think all of that will be part of the broader negotiation, but much harder to get done.
For the same reasons we just discussed, I don't know how you do any of the other things. There's no built-in constituency in Congress. It's not as if we've spent years building up an argument for no tax on tips or whatever it might be. So to your point about the TCJA clean extension being the base case, I think that's almost your only outcome. It's your bear, it's your base, and it's your bull outcome. Because I just don't see how, when you have 2 Republicans that want one thing and 4 Republicans that are against that but for something else, I just don't know how you come to any sort of an agreement on anything, especially if you're going to try to get 2 reconciliation bills in this year. So I think that's your base, your bull, and your bear outcome. I don't think there's any conversation at all.
Yeah, I totally agree. Congressman Lawler and others will certainly be talking about SALT. And I think that there's a small chance we could see a doubling of the SALT cap from 10 to 20,000.
Sure, the marriage penalty.
Yeah, but other than that, I think it is fair to say that what is the skinny bill, the simple answer is probably going to be the most likely answer throughout this next Congress, because the bottom line is, I totally agree. Once you try and bring a few folks on one side, you're going to lose folks on the other side. And so it winds up just being, again, the art of the possible. What can Mike Johnson convince President-elect Donald Trump is good enough, is enough of his agenda to get through, and what can he convince his caucus to vote for?
Okay, I want to talk to you about the fight that was looming yesterday on Twitter. I'm not sure if you saw it. It was between Laura Loomer and actually a ton of other people. I know, Dan, you also saw it. So basically, Musk and the far right at the end of the day, are arguing over immigration and H-1B visas. Where do you think Trump comes down on this issue?
Well, I think Trump, his focus first and foremost is on the border. So it's not to say he hasn't thought about the H-1B question, the skilled immigrants come in question. It is not his first priority, right? He wants to secure the southern border. He wants
not his, but the priority of many people he's putting in the administration.
Yeah, exactly. I totally agree. And frankly, the priority of his base that got him elected not once but twice. And so I don't think he has on the H-1B question. It's not going to be his priority. It's clear that it's Ramaswamy and Musk want to talk about it, and it is again another example of a rift we're seeing in this kind of bigger tent Republican Party.
Yeah, so for the viewers that may not be as online as we are, just to clarify, there is this debate going on among what we call the right that wants to restrict immigration in a broad sense, and what has been known now as the tech right, the Elon Musk world, that agrees in general with the idea of restricting immigration writ large, but also wants to increase the availability of these H-1B visas that provide for the quote-unquote skilled immigration. And those two worlds are clashing for some reason. It happened over the weekend. I guess Vivek Ramaswamy got involved. I would agree that I don't know that the President-elect Trump has spent too much time thinking about the nuances of this, but he has spoken in the past about the need for skilled immigration. He wants to make it possible for those people to come here. I think while this is a fun online conversation, I think the skilled immigration argument is going to win out, because you do have Musk sitting in such an important position next to the president. You have had the president discussing the need for skilled immigration, and it does provide for the masses something of a bifurcation, so you don't look as restrictive by saying, listen, we just want to close the border, to your point, but we also want the skilled people to come here. Is that not where this settles out?
Well, I think it is probably the hope for Donald Trump and Elon Musk, et cetera, right? That's kind of your perfect mix. It's your best. We're going to close the border, but we're also going to allow the best and the brightest into the country to propel our economy forward. The issue is that's just not how the far right sees it, right? And so I actually think that changes to the H-1B program are going to be harder, or I should say easier said than done, right? It makes sense to many of us. It makes sense in the context of the economy as it sits today. Certainly, you can have both, right? You can close the border. You can also allow the most skilled in. That there's no sort of internal disagreement there. But the issue is, I think, MAGA Republicans, it's not what they want, right? And while Trump doesn't have to get reelected in 4 years, he can't get reelected in 4 years. House Republicans have to get reelected in 2 years. Senate Republicans have to get reelected 2, 4, and 6 years from now. So they have to answer to the MAGA base.
Right. And you made a great point. Musk is definitely not in this far right Laura Loomer camp. He's battling them, for those that maybe are just kicking up online on exactly what happened overnight. So let's talk about January. We have 60 seconds. Sequencing: immigration, tax policy, tariffs. 1, 2, 3.
I think so. We'll get the first reconciliation package will be immigration and energy. I think the second sort of big conversation, although we're already having it now here, is tariffs. It's probably Europe early, China, early, but most importantly backloaded and very high on and targeted on specific sectors. And then the tax question is going to be 2H. And the bottom line is it's because the Republicans don't have the package around which they can form a majority today.
Rob Casey, thank you so much for joining us this morning, and happy holidays and happy 2025. Rob Casey of Signum Global Advisors. Chuck Lieberman of Advisors Capital Management writing this: the economic environment should be slightly positive for stocks and slightly negative for long-term bonds. Inflation prospects could easily worsen between tariffs and immigration policy, which would freeze monetary policy for some period, but longer-term rates would increase. We're hearing a lot of this, Chuck, and he joins us now. Chuck, thank you for spending your Friday morning with you. Happy holidays and New Year to you. So how are you thinking about the start of 2025, especially when policy, things like tariffs, immigration, are going to be so important to how the bond market trades?
Absolutely right, Anne-Marie, and I agree with you. Happy holidays to you as well. In my judgment, there are things to be nervous about. The possibility of tariffs will obviously increase prices for domestic consumers. That's potentially a really big negative when the Fed is trying very hard to bring inflation back to 2%. We also have concerns about the labor market. Job growth has been pretty good, but if immigration policy changes and President Trump actually removes people from the U.S. who came in illegally, but nonetheless are working, that's going to reduce our labor supply, which will drive up labor costs and also inflation. So there are reasons to be concerned about the prospects for inflation.
When it comes to inflation and tariffs, do you think this is a one-off hit, or could this be more pervasive?
Well, it initially is largely one-off, but it then tends to spread through the system. When you have a single auto contract, for example, that's negotiated between the UAW and the auto companies, it's a one-off thing and it pertains just to that industry. But nonetheless, everyone else is watching, everyone else is looking, and many other workers, labor unions, get ideas that they can also push for 10% increases for 4 years in a row. That's a large increase, and so it does tend to transmit through the system.
So what do you make in terms of Fed policy with this kind of fiscal environment?
Well, I think the Fed wanted to get rates down while they could. And so they sort of rushed. They did 50 and then 25 and then 25. So they reduced rates by a full 100 basis points. But the market is looking at the economy. And the market is seeing that the economy is not weak. If you recall, a year ago, a lot of people were forecasting a recession. Obviously, that didn't happen. In fact, growth is well above potential. And it becomes even further above potential if we have fewer workers because we are getting illegal immigrants to leave the country. So no matter how you slice it, I think we've got inflation risk out there. The economy will probably grow more slowly. If you can't hire, you can't expand the economy as quickly. So we could have a very unusual combination of moderation in growth, yet upward pressure on inflation.
Do you think the Fed at the moment is restrictive?
No. Very simply. What I look at is not overnight money. Because if you look at overnight money relative to inflation, you can make a case that the funds rate is roughly on average where it belongs historically. You have a much, much tougher case when you look at the 10-year. At a 4.60 yield with inflation in the ballpark of, let's say, 2.60, I'm being a little bit generous here. You have the 10-year 200 basis points over inflation. Historically, it's been more like 250. So in my judgment, interest rates are not a bar to investment, to spending, and we see a very strong corporate issuance of debt in the marketplace because corporations see prevailing interest rates as attractive.
So when you put all of this together, potentially inflationary policies, you don't think the Fed is restrictive. Do you think we could see a 2025 when the Fed is actually not just on pause, but maybe raising interest rates?
Yes, but not in the early part of the year. In the early part of the year, the Fed is going to wait to see what happens with policy, with tariffs, with immigration policy. They'll look at the growth rate of the economy, and they will wait. They can afford to wait. There's no reason for them to rush ahead to lower rates anymore, and they have good reason to regret, shall we say, having lowered rates as much as they have. But I expect them to be on pause for a while, and then it depends very much on how things play out.
Chuck, thank you so much for your time this morning. Happy and healthy 2025 to you. Chuck Lieberman of Advisors Capital Management.
This is the Bloomberg Surveillance Podcast, bringing you the best in markets, economics and geopolitics. You can watch the show live on Bloomberg TV weekday mornings from 6 a.m. to 9 a.m. Eastern. Subscribe to the podcast on Apple, Spotify or anywhere else you listen. And as always, on the Bloomberg Terminal and the Bloomberg Business app.